Hi, in this video I'll be showing you exactly how you can buy very high, right? How you can buy low, okay? And then you sell high. Simple. By applying the Bollinger Band, upper Bollinger Band and the lower Bollinger Band. But first, remember, we don't trade in isolation. What does that mean? It simply means you need to determine the trend of the market first. Know your trend. Looking at this facially, you know this is a downtrend. Connect trend line, you see price trending. You can see that price is dominating. This is a typical downtrend. So you know that we are in a downtrend. And again, you see price trending below the middle Bollinger Band, which shows that we are in a very strong, healthy downtrend. Then what is the next thing you do? You need to now do what? Mark your point of interest, where you want to take the trade from. In this case, look at it. We had this price behavior. The price has been going, price is making higher, low, high, low. So automatically we have all this other block as our point of interest, where price has been getting rejection from. Now look at this other block. You realize with me, you will agree that these other blocks now, this other block falls around the zone of our upper Bollinger Band. Do you see that? So what that means is that if price now return to this place, it's a downtrend. So even if price crosses this middle Bollinger Band and price gets to this other block zone, since price has not break out of this zone, it is not a change of trend yet, because the momentum is still very much bearish. So we are going to trade this zone as an exhaustion point, meaning that that is the end of this retracement. And if you look at it, look at what happened here. This is a divergence. This is a divergence, which is a confirmation that the bearish engulfing candle, and you see how price failed from that upper Bollinger Band. That is how you can do it. If it is in a downtrend, now price is at this zone. Let's look at this. This is our support zone. Assuming we want to trade price action, support and resistance, because price already left here, price left here. And then if this is our support zone, already price has break out of this support zone already. So what do you happen? We want to see price retest this support zone and continue. In that case, our entry is based on the confirmation of the middle Bollinger Band. Do you see that? But if this is an uptrend, look at what happened here. This is a support zone, because in this case price has been in an uptrend. So you can see that price was rejected from here initially. Now look at when price came into this zone. See again, we have divergence. And price is around the zone of the lower Bollinger Band. So this means we can buy low here, knowing that this is the end of the pullback. We'll buy low, and then you see how the price plays out. Simple, beautiful, and straightforward. That's exactly how you can make that particular trade entry. Look at in this case, let me show you something very, very important that you need to pay attention to. In this scenario, price repeated the same pattern. Here, price pulled to the middle Bollinger Band. But do you know that price pull here? Can you buy here because it's touching the lower Bollinger Band? The answer is no. The question is why? Because the price touching the lower Bollinger Band here is not happening at any point of interest. This zone here is not a support zone. It's not an order block. So we are not making any entry here, because this zone here is not an order block. Neither is this zone a fair value gap. Neither is this zone a support and resistance zone. So we stay out of it. But look at when it retests the middle Bollinger Band and it was rejected from there. We consider the middle Bollinger Band as our point of interest. So we can now say, based on this middle Bollinger Band, we can have a sell entry. And you see how price has been falling down. So this is how you can apply it. You can use this Bollinger Band, upper Bollinger Band, which is this lower Bollinger Band, and buy low and sell high. It is simple, it is straightforward. You can apply this across other pairs. You can apply this on any pair. This is crash 1000. Look at this now. Crash 1000 has been in a downtrend. So here now we had a break of structure. This has already broken structure. So now we are in an uptrend. Lower high, lower low, lower high, lower low. You can see that. So here we had a break of structure. So here now is our point of interest. So what do we want to see? This other block. This other block is our point of interest. So I'm going to mark it. I will mark it now. This other block is our point of interest. So what will happen? What will happen is this price will move this way. We are expecting price to come all the way to this other block. When price will get here, this middle Bollinger band automatically, this one will already be here, and then together they will buy to the upside. This is simple, and this is exactly how it works. And I believe you have gained value. Don't forget to subscribe, like, share, and you can ask your question in the comment section. If you have any direct inquiry, there's a link in the description to a Telegram group where you can ask your direct question. Thank you, and see you in the subsequent video.